Hello there, this is fairbinaryoptions.com, and I would like to talk about the Australian dollar and the euro and Australian dollar, actually, the cross. And this cross actually, again, is quite bullish. I'm talking about a pattern that is forming here. It is being called a head and shoulder, but an inversed one. And a head and shoulder in this position is quite a bullish pattern. What does it mean, bullish pattern? It means that we want to buy call options, and for the expiration date I would choose a bigger expiration date in order to avoid the volatility, avoid being trapped in volatility environment that is about to come with the ECB, the European Central Bank, and the non-farm payrolls on Friday. The pattern is being called an inverse head and shoulder given by this neckline, so this would be the neckline that I'm looking for, but not in this fashion, as it is not mandatory for the neckline to be a horizontal one, but I would say that it is going like this. Let's make it a bit bigger, like this, and let's change the color. And therefore this is our head and shoulder. What is the characteristic of a head and shoulder? First of all, you have a consolidation area for the left shoulder, then you have approximately the same consolidation area for the right shoulder, and in between you have a move, a spike, in this case a spike lower. So an aggressive move lower being followed by an aggressive move higher. In the case of a regular head and shoulder, you would have had an aggressive move higher being followed by an aggressive move lower. How to trade a head and shoulder? Well, normally, after the neckline is broken, and I would say that it is broken here, what we should expect is the measured move, and its measured move goes from here to here. Let's make it of a bit bigger, like this. Clone the measured move, projected by the moment that the neckline is being broken, and what do you know? We have quite a big outcome. It means that this market is going to go and break the previous highs. These are the previous highs into the 155. So it is quite aggressive, and it is quite important what's happening now on the Australian dollar pairs, and this is the euro and Australian dollar cross, because we have the Reserve Bank of Australia behind us now, and the Reserve Bank of Australia, the RBA, is not going to meet anymore in 2014, but only in February 2015, and this means that the Aussie or the Australian dollar currency cannot be talked down anymore, like it has been the case even with the latest decision that we had from the RBA in the previous Asian session. I would say we will find out if this break is for real by the time the GDP, or the gross domestic product, the total goods of values and services, is going to be released in Australia, and that one is released on this very next Asian session. So that is important as well. Other than that, I would like to set the expiration date for the move, and the expiration date here needs to be end of week. So buying call options with end of week expiration date. For the ones that are more courageous, and let's say that the broker allows, I would even go with end of month as well. You might say, alright, who's staying end of month, 1 month for the option to expire, to see if the option expires in the money or not? Well, binary options trading offers something like 70-80% rate of return, so 80% in a month is good in my book. Thank you for being here. Call options for euro Australian dollar. This baby is going high. Bye bye.